Good morning, friends. There are certain changes in some of the accounting standard which is applicable for May 2017 exam onwards. So we will cover those changes. The rest part is already covered in the accounting standard videos, right? In these three standards, that is AS2 on inventory valuation, AS13 on investment accounting, AS14 on amalgamation. There are few changes. In AS2, the para 4 has been slightly modified. Now let us see what the old para says. This old one, right? Inventories do not include machinery spares, which can be used only in connection with an item of fixed asset and whose use is expected to be irregular. Such machinery spares are accounted for in accordance with AS10, that is for fixed asset, right? So earlier these two conditions used to be there for machinery spares to be treated as fixed asset. If either of this condition is not fulfilled, then they used to be treated as inventory, right? Now AS2 new, it says inventories do not include spare parts, servicing equipment and standby equipment. So its scope is little increased, which meets the definition of property, plant and equipment as per AS10. Such items are accounted for in accordance with AS10 property, plant and equipment. So if it meets the definition of property, plant and equipment as per new AS10, then it will be treated as fixed asset. Otherwise it will be treated as inventory to be covered by AS2. Fixed asset के या property, plant and equipment के definition में क्या है कि which are held for use or for administrative purposes or for renting purposes, right? These are the fixed asset and which are to be used for more than a period of 12 months. Those are treated as property, plant and equipment. Now in the para number 26, the common classification of inventories which is prescribed in AS2, that has been little increased, the scope has been increased. Additionally includes following new AS2 stock in trade in respect of goods acquired for trading. Others, anything new, that also can be disclosed there. Only the small changes. Practically you can say it is not going to affect any of your chapters as such. Now we will take AS13. AS13 accounting for changes in accounting for investments. Now the para number 20, it is regarding investment property. Practically it will not have any impact as such on anything. New AS13 says, that is amended AS13, an investment property is accounted for in accordance with cost model as prescribed in AS10 property, plant and equipment. Property, plant and equipment AS10, for which we have provided you the new videos you will get. In that we have covered new AS10 property, plant and equipment, which is totally you can say is changed. It covers depreciation also. So it replaces your old AS6 and AS10. So that AS10 says कि property, plant and equipment are to be accounted either by cost model or by revaluation model. So for property, plant and equipment, only cost model is allowed, right? The cost of any share in a cooperative society or a company, the holding of which is directly related to the right to hold the investment property, is added to the carrying amount of the investment property. It was there earlier also. Earlier it was the cost of any shares in a cooperative society or a company. That means only this small portion has been newly added. So as such there is no change in the impact, because like you are having a flat in a cooperative society. So to own that flat you are required to own certain number of shares. So what this says is that the cost of those shares will also be a part of the investment property. That is what is the impact of. It was earlier also there, now also there. The 30 is related to that investment property only. An enterprise holding investment property should account for them in accordance with cost model as prescribed in AS 10 property, plant and equipment. This is the new portion, right? In the old one, an enterprise holding investment property should account for them as long-term investment. And as you remember, the long-term investments are as such valued or carried at cost only. So impact wise there is no difference. Now it says you should follow cost model, new one, for as per the AS 10, and the old says you treat it as long-term investment. Long-term investment in any case were valued as per at cost. So impact wise there is no change, right, in AS 13. Now in AS 14, again it will not have any impact as such. AS 14 new para 18 and 39 related to statutory reserves, which you remember it is required in case of amalgamation in the nature of purchase, right? So when statutory reserves are recorded in the financial statement of transferee company by a corresponding debit to a suitable account head, example amalgamation adjustment reserve. Earlier they called it amalgamation adjustment account. Now they called it amalgamation adjustment reserve. In fact, amalgamation adjustment account was more suitable, but they changed it, which is presented as a separate line item. Because now in the new Schedule 3 as per Companies Act, the format does not have a separate miscellaneous expenditure head, which used to be there earlier. So because of that this is modified. So it has to be shown as a separate line item as per guidance note of ICI, either in current asset or non-current asset, depending upon whether it is to be amortized in 12 months period or beyond 12 months period, right? What will be your entry? One effect will be in this amalgamation adjustment reserve debit and statutory reserve account credit. Those credit balance statutory reserve will appear in reserves and surplus, and this debit balance will appear as a separate item either in other current asset or other non-current asset. Now the old AS 14, what it says, when statutory reserves are recorded in the financial statement of the transferee company by a corresponding debit to a suitable account head, example amalgamation adjustment account, which is disclosed as a part of miscellaneous expenditure or other similar category in the balance sheet. So now because that miscellaneous expenditure head is not there in the new Schedule 3 format, that is why this amendment is required, right? So as such impact wise it is not going to have any changes.